Ladies and gentlemen, karibu to this other session of Kurgateric Finance and Accountancy tutorials. We are still on adjustment of final accounts, trying to check those elements that normally are found in the additional information of the question as far as adjustments of final accounts is concerned. Our next item in line was provision for bad and doubtful debts, right? Before we continue, if you are not subscribed to the channel, please do that. Please do that. And you share with as many friends as possible. Please hit the notification bell so that when I upload other videos, you don't miss out. And then also give it thumb up. Please like the video so that it can motivate me to work even harder to bring you these free tutorials. So the provision for doubtful debts we have quite a number, around 4 ways of treating the provision for bad and doubtful debts. Very, very, very important. So I'm going to show you how to treat them one by one. So before we move on with how to treat the provisions, it's very important for us to understand the treatment of bad debts when bad debts have been given, and then you're supposed to prepare for the provisions for bad and doubtful debts adjustment. Right? So here we'll play around with the trial balance and the additional information. Very important. So these are some of the things that you must know, you must have in your fingerprints so that you be good as far as adjustment of the bad and doubtful debts is concerned. So let's say we said when you are giving the format of the trial balance that if we have a trial balance as such, trial balance has got the debit and credit side, and then this debit we have debtors. Remember the provision for bad and doubtful debts, these 4 debtors, those who've taken goods for us on credit, but you feel that they have stayed so long and they have refused to pay back, so they are going to be declared as bad debts at the end of the day, but we have to provide as a company more often on the same. So let's say we have debtors of a certain figure here, and then we have the bad debts here, that way, yes, and then you have the provisions for bad debts. I mean the provision for bad and doubtful debts. So that one normally has the credit balance. So the debtors have got debit balances, bad debts are more of losses or expenses, and they have debit balances, right? So this is what I was talking about. You've been given the trial balance, that is it. We have so many other items here. We have the creditors, we have the capital, what, all those items. And then we have the additional information. The additional information. You are told in additional information, we have provision for bad debts is maybe 10%. 10% of debtors, 10% of trade receivables. Debtors are also called the trade receivables. So let me be specific here by writing the figures so that we see how to play around the same. So if we have like 2,000 here, then bad debts are like 500, then provision for bad debts is like 300. Yes, 300. That is the trial balance. But the additional information are told that provision for bad debts is 10% of the trade receivables. So when given that such kind of a question, you have the debtors here, which is okay. The bad debts are here, the provisions are here, and then you are told here in the additional information that the provision for bad debts is 10% of trade receivables. So you are left wondering, how am I going to work out this one? So let me simplify this one. Let me do a small table here that maybe you have the trial balance here, the trial balance, and you have the additional information. The trial balance, you have additional information. Then maybe we draw something. I simplify it for you. that way. And then here we say it's accounting treatment. Yes, good. So let's say, for instance, let's say the provision for bad and doubtful debts is in the trial balance. Yes, it is inside the trial balance, and it is not there in the additional information. So let's assume that we have nothing here in the additional information. So we have it in the trial balance, yes. So you have it here in the trial balance, but not in the additional information. So I'm trying to simplify and make sure you understand this one so well, because this one simplifies everything, right? Yes, but before even we continue, if we have the bad debts in the additional information and you have to calculate for provision for bad debts, you must, and underline the term must and you bold it, you must first of all subtract the figure of the bad debts that you've been given in the additional information from the debtors, so that you calculate the provision for bad debts from the balance. Are we together? Don't calculate the provision for bad and doubtful debts when you have not reduced the bad debts that are in the additional information first from the debtors. Good. So I'm assuming the figure that you are what I'm explaining here, that is the provision for bad and doubtful debts, is net of the bad debts. So I've said if the provision for bad and doubtful debts is in the trial balance, yes, it is in the trial balance, but it is not in the additional information. I'm assuming it is not here in the additional information. So this is how to treat it. Number one, or what you are going to do is to leave it, just leave it as it is. Leave it as it is, no adjustment. Don't adjust anything. Are we together? Don't adjust anything. Good. That is number one. This you can say is number one. Number two, if the provision for bad and doubtful debts is not in the trial balance, it is not here. We are assuming it is not here. It is not in the trial balance. But it is yes in the additional information. Are we together? It is not here in the trial balance, meaning it was not provided last year, but it is in the additional information, meaning we are introducing it this year, right? Yes. So this is how to treat it. This is how to treat it. This is what you do. You take full figure. Take full figure to income statement as under, or rather to the income statement, income under expenses. Yes, yes, because if it is in the additional information, it's making sense. If it is in the additional information, that means it is something that is being introduced for the first time. We are providing for the first time. So the company is digging deep into the pockets to provide for those bad debts. So it's a loss. It's a loss or an expense to the organization, right? That's why you are taking full figure to income statement under the expenses. Are we together? And then treatment number two. You take full figure. When I say full figure, it is the full figure of the provision. Are we together that we've done? If it is 10% of 2,000, then that 200 is taken as full figure to the income statement expenses, or you take that same full figure to the balance sheet and reduce from the debtor's value. Good. So I want to believe that you are understanding, ladies and gentlemen, right? That one is very, very straight. But when it comes to the last one, this is where we have a lot of problems. Many people get problems here. So yes, it is in the trial balance, and yes, it is in the additional information. So it is there, the two sides, the trial balance and in the additional information. So this is what to do. Number one, calculate the difference. Calculate the difference between the two provisions. The difference between the two provisions are the ones that are in the trial balance and the one that is in the additional information. You calculate the difference, and if the result is increase, you then do what? If it's an increase in provision, if it's suppose it's more, that is last year is less than this year's, then if it's an increase, you take to income statement as an expense or under expenses and losses. And then if it's a decrease, you take to the income statement as income. So under other incomes of the income statement, you put the decrease in provision for bad and doubtful debt as an income. Are we together? And then in the income, number B, in the balance sheet, you take the full figure of the year. Of the year means the one in the additional information. Are we together? So that is how to treat the provisions for bad and doubtful debts. This is a very important table that you should get to understand. Make sure you understand this. The moment you understand this table, then the provisions will never give you problems. Right? Are we together? So I want to do this practically. I want to do it practically. And allow me to delete this part, to rub that side. So let us start by this one. Yes, no. It is in the additional information, yes, but not here. You leave it as it is. No treatment. It is not in the trial balance, but it is here. So, I mean, it is not in the trial balance. Let me write this way. It is not. So the provisions are not in the trial balance, but they are here in the additional information. So what you do, you said you take the full figure of the provision to the income statement. So you say 10% in the additional information of the net debtors, which is 2,000, which is it 200? So this full figure you take to the income statement. The income statement, you take it as 200 as an expense. And then in the balance sheet, we've said you take the full figure of 200 to the balance sheet and reduce debtors. So in the balance sheet, you will say debtors which is 2,000 in our case, you minus 200 so that you get 1,800 as net debtors. So that is what I'm trying to explain in this part 2, or the type 2 of how to treat the provision. Yes? Yes. So this other one, yes. So this other one is where we have the provision in the trial balance. Yes, it is there in the trial balance and it is in the additional information. So the provision is should be this other side, 300. Yes, that is the provision 300. We also have provision here. So what you do, you calculate the provision. You say, okay, you kind of check the difference. You say in the trial balance or previous, you say previous is 10%. No, sorry. Previous is 300. Previous is 300, what is in the trial balance. And then current, we are providing 10% of 2,000. Say 300. 10% of 3 is 200. So what you do, we've said you calculate the difference. So the difference between 300 and 200 is 100. So what have we done? This is a positive difference. So last year we provided more 300. This year we've provided less 200. So we've provided less by 100. So that means the company is not giving out the 100. So it is the income to the company. We are not providing for the bad debt. So it's an income. So this one is an income. You take to the income statement as the income. 100 as the income. And then in the balance sheet, this is what you do. You say 2000, you take the full figure of the year and reduce from the debtors. So you say 2000 minus for the year is 200, not 3000, not 300, it's 2000 because that's what we're calculating, which is 1800. Are we together? So let us assume now that it is the other way around. It is the other way around. We assume that this is 300, this is 200, and this other side is, you can say this is 3000, and then you say 10%. So previous is what we have in the trial balance, 200, and then current, 200, and then current is 10% of our 3000 here, which is equivalent to 300. So we have a negative 100. Negative, you show it in bracket. This one is an increase. Yes, this is an increase. Increase in provision, meaning the company is digging deep its pocket to get the 100, right? So it's losing further 100. So that 100, what do? This is how to treat. In the income statement, you say 100 as expense. And then in the balance sheet, you just say the provision for the year is 10% of 3 is 300. You say 2000 minus, 3000 this time round, minus 300. Yes, which is around 2700. So ladies and gentlemen, that is how to play about or to play around with the provision for bad and doubtful debts. Are we together? Are we together? So make sure that if you don't understand this, get in touch with me in the comment section, or you can just contact me via the contact details that I have provided in the beginning of each and every tutorial. So make sure that you understand this concept. Very, 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 very important in your examination. So next session, we will be looking at the accrual and prepayments as the next adjustment of final accounts. So until that time, it's goodbye for now. Subscribe.